Now to our defense space. Prabhudas Lilladher, they're optimistic on the sector on the back of the government's focus here on making things at home and the robust order book pipeline as well. Amit Anwani, research analyst at PL, joins us on the show. Hi Amit, good morning. Thanks so much for joining in. Always good speaking to you. Well, tell us, from the defense pack, there's been plenty of interest out there. What's your top pick and give us a rationale for it?
Sure. So see, we have been seeing defense has been the focus of this government, and we're seeing gradually and slowly the policies have been favoring the sector, including the focus on co-production, transfer of technology, reducing the import component, and at the same time making the robust supply chains for the platform OEMs. And we are seeing a lot of fleets at all three services getting aged. So there's a lot of capex which is on the cards for all of these three services. And broadly, if we see, all the DPSU platform companies are at the cusp of performing and delivering good sustainable revenue in the coming years. And we have seen the price also rallying in past 1 year or more than that. Yeah.
How do investors align themselves with the volatility in earnings? These are very large orders that the companies have won, but they're spread over 10 to 15 years. You don't make fighter jets in 2 or 3 years. These take a very long time to fructify. And in that period, there is going to be a lot of volatility in terms of earnings in the order book, in the pipeline, etc. So what should investors do when you see those dips post earnings? Or how do you measure the earnings cycle for these companies now?
Right. So I think earnings on a quarterly basis will definitely be volatile. So if we talk about the order book of the large OEMs, including HAL at 80,000, BL at roughly about 55,000, MDL at 38-40,000. So they're talking about at least, order pipeline or intake in next 2-3 years as similar to what they have as an order book. So there's a lot of sustainability which is going to develop compared to the last decade versus the next 5 years with respect to earning sustainability going forward. At the same time, we are seeing, with the current level of manpower and facilities, they can at least achieve 1.5, 1.7x revenue over the next 2-3 years. I think obviously backed by the robust order intake which they're expecting. So having said that, there's a lot of chance of operating leverage playing on, and we have to make a longer view. As you said, a lot of defense companies are now accumulating a lot of order book, 3 to 4x for companies like BEL, HL, and at least 7-8x for shipbuilding companies where the timeline is very long gestation. But having said that, as there are talk that India targeting almost $25 billion, including $5 billion of exports in next 4 years. That itself indicates there is a lot of chance of good revenue sustainability, maybe double digit for next 4-5 years for large OEM platforms. And at the same time, we are focusing on, as I said, a lot of transfer of technology for the robust supply chain in India for the platform OEMs. I think this will play. But at the same time, we have to keep a long view, and directionally defense spec with a longer term view definitely is for the good ride.
So Amit, hi, good morning. So yeah, the tailwinds are there and well established, well understood now. But with stocks, you would say extend the time horizon. I mean, if you're buying here and your picks are BEL and BEML?
Right. So I think we have rating right now on BEL. So we're positive on BEL. And as we said, obviously the stock has rallied a lot and it's trading at roughly about 22-23x forward. But having said that, because of sustainability, and BEL is largely beneficiary when any order comes into any services, including aircraft, submarine, because of the defense electronics. And we are seeing a lot of sustainability with respect to performance, order intake, and at the same time margins. So I think we can expect some re-rating. At the same time, these companies are talking about at least 2 to 3 years of sustainable order intake, which will also play out. So we have a buy rating on BEL. But having said that, I think HL as well as MDL can also gain in the long term. HL especially, we saw the repair overall opportunity also panning out for HAL. And there is a good sustainability, double-digit growth can come in the longer term when they start delivering the LCA aircrafts starting FY25. At the same time, there are a lot of, they're talking about 48,000 crore order pipeline for FY24 and at least 80,000 to 1 lakh for next 2 to 3 years, including a lot of helicopter orders, including advanced combat, light utility. So I think HAL can also play out in a longer term, despite there's been a significant rally recently. And MDL, I think they got the very good capacity, maybe 10 submarines and 10 warships to manufacture. And they're, I think, currently at 5 each. So there's a lot of traction which can develop post one big order which is expected, in which L&T along with the foreign partner and MDL along with the foreign partner are there for the submarine. So that could be about 45,000 crore large order. So I think these three platforms I expect to perform very decently and sustainably.
Well, BEL, HAL and Mazagon Dock are the three names which Amit is highlighting could be sustainable picks from here. Thanks very much, Amit. Good speaking with you here on CNBC-TV18. Well, there's 6 minutes to go.